Good morning. I'm Swing Pony, and I am joined here by my lovely co host, Pax. Welcome to the Place Your Trades Network, where we discuss trading daily options using the CME Group's event contracts. These give us access to 11 different futures markets, including the E-mini S&P, NASDAQ, Russell 2000, gold, silver, euro, crude oil, natural gas, copper, and even Bitcoin, which was just recently added. We have an awesome show today on Capital Preservation Friday. Before we get started, though, today's podcast is brought to you by Tradeovate. They're the ones who've created this custom app that we all trade event contracts on. And the event contracts are also available to trade on the Dome now on Tradeovate's main interface. So that's been a game changer for me. Makes it much, much easier to scale in, scale out, and trade them intraday. Pax?
Good morning, sister.
How you doing?
I'm doing well. Still tired.
I honestly am still tired myself. So I got to meet Pax and the whole crew this weekend. We went to Viva Las Vegas and we had an incredible time. One of the things that was surprising to me is I already love everybody on the Place Your Trades team. We've all bonded, we've all communicated online quite a bit. I did not expect, I love you, Pax, I do. But I didn't expect to love you this much and everybody. Like when I say we all bonded so much, it was crazy. It was the best experience ever.
I agree. I agree. I totally agree. You know, we had I don't know. It was just a lot of fun. Vegas is not my thing. I don't like gambling. You know, I haven't been there in 25 years.
Oh wow.
Yeah, if I was, I mean, no, not 25 years. Like 03, I think was the last time I went. You know, if I'm going to go, and I'm going to go with a group of people like you guys. We had so much fun. We had great meals, just great conversation. Just it was really, really, really good to get to meet you guys all. You know, I've known Anthony since he was a teenager when we were on the trading floor together. But getting to know you and Savannah and Tracy and Julia Cordova and holy moly, and getting to know Blaine, you know, face to face was amazing. Amazing. So thank you guys for just being you, and happy Capital Preservation Friday.
Totally agree. Pax, you did something hilarious. So we're walking through the casino floor. Pax is going up to everybody. He's like, as they're walking by, he's like, "Hey, how you doing? You having a good time? You winning?" And they're all like, "No, no." No, like everybody had such a look of defeat. And it kind of, I hate to make parallels to the casino and the stock market, but it reminded me of like, if you ask the same people who are like gambling on earnings, who are just gambling on like aimless zero DTEs and not trading efficiently, it's sort of the same answers. You having a good time? You winning? No. So that was fun. I also discovered that I have a major love for craps. I blame Anthony Crudele for that one. He told me it would be a blast. I was like, I don't get it. I don't think I'm going to have fun. I love craps now. It's a problem. Keep me away from craps. Anyways, moving on to today's topic, which is missing major moves in the market. Guys, if you're in the chat, if you're tuning in, I want to know, did you trade yesterday's price action? Did you trade that vertical move on the E-mini S&P? Because I was so busy yesterday. I was still tired from Vegas. And I was like, you know what? This is the kind of day where if I trade the market, I'm not doing it right. I'm fuzzy. I'm going to sit this one out. And I took 2 event contracts. Got enough for a little lunch money, but I missed the whole thing. And I called Pax afterwards and I'm like, hey, I missed that move. He's like, I missed the move. I was like, great. We're going to talk about it tomorrow. So how did that go for you, Pax? Did you feel a little bit of FOMO? Did you feel well balanced? Like, what are your thoughts?
I think if this was 10 years ago, I would have felt FOMO. But as I've grown and matured as a person, as a man, and as I've grown and matured as a trader, I don't experience FOMO very much. You know, it just isn't something that's part of my life or part of my trading. So I've changed it. I saw this. I didn't come up with it. I read it or saw it someplace. JOMO. So, you know, and it's just something I talk about all the time. So
Joy of missing out.
That's it. I wasn't in front of the screens either. But if I was, I would eventually maybe I don't know. I can't I can't say whether or not I would have gotten along or not, but I had gone to a funeral that was right out of a scene out of Sopranos. It was it was very funny in the old neighborhood that we were growing up in, and uh, so I missed it. But I also came into the day. I thought that we were breaking out to the downside. We were below that level that I
Mm.
about the last couple of weeks, 40.99, and we closed below it for the first time in a month or so. So I really thought that this was, hey, we're going to expand down. We've got a gap left to fill at 40.09. I thought we were going to do that. We didn't, and the dip buyers came back, and and the market rallied. So we talked last week real quick about when the market looks like it's breaking, all the bears come out of the woods. Ooh,
Oh, yeah.
and when the market starts to rally, then all the bulls, everybody starts getting vocal about their opinions. But when we simplify things and we trade the price action as it is, not as we think or want it to be, we are putting ourselves in a position to capitalize on the price action. And yesterday's rally, although I didn't see it in my opinion, I didn't see it in my bias, was a really, really great trade. A lot of traders in my group ended up having the best days of the year. Well, okay, not a lot, but a couple had their best days of the year, their best weeks of the year, which, brings us to Capital Preservation Friday. You have a great day. You have a great week, the best of the year. Slow it down today. Take
Slow
some
it down.
accounts and start all over again next week. Take it easy. If you miss
The other thing that I would add to that, not only is it Capital Preservation Friday, you had a great day yesterday, but yesterday was a beautiful trend day. Beautiful. And one thing that I've learned in this market, can you get 2 trend days back to back? Absolutely. Sure, it's possible. But there's a lot of times where when you have one really strong move one day, you tend to get a little bit of chop or a little bit of a more range bound market that may not break until later in the day. So I think it's very easy to have one strong day where you go into the next one with really strong expectations of more of the same. But for me, it's always a cue of like, don't take yesterday's expectations into today. And I will say for me, Pax, normally what happened yesterday, because I mean, that price action was as beautiful as it gets. I'll be honest. When I saw that chart, I was like, wow, I really missed this whole move.
One level.
Part of me typically would get a little bit of FOMO that I could potentially drive into the next day. Okay, I missed that yesterday. Today's my shot. I want to jump in. I want my piece of the pie. But what really gave me peace was you had shared a story with me. It was on State of Flow, actually. You had said the market had a massive day.
Yeah.
You missed the entire move. I can't remember if it was to the upside.
It was 08 when the market started to fall apart.
Got it. So you go into the pit and you're like devastated because you missed the whole move. And you said something along the lines of like, I would have made so much money today. And you were so distraught that you missed it. And there was somebody else in the pit who said, or you could have been like me and you could have played it in the wrong direction and lost a lot of money.
He didn't politely say it like that.
Well, how did he say it? Why don't you tell me?
I walked into the pit. I was like, oh, I was in the hog pit then, and my mother died. My mother was in the process of dying. And so I missed much of that. Now, to set the table of this story, we had been kind of in a sideways choppy market for a long time, for a couple of years in the NASDAQ. So I went, and that's when I started Prop Group, my own prop firm. And, so I come into the pit, and I would come into the NASDAQ every so often just to trade, to show my face. Hey, I'm still here. I might be in other markets. I might have other things going on, but I'm still here. So I come in and I made a market. I was like 50 to even. And I said something to the trader next to me, who's an old seasoned currency trader that came into the NASDAQ, Craig Gordon. And I said, geez, man, how you got to be killing it. If I was here, I'd have been short. I'd have just, man, I would have had a great day, or I'd be killing it now. And he turned to look at me with like disdain in his eyes and sweat dripping off of his face. He said, yeah, maybe you could have effing been long like me. I got turned around. And then he went and told me the story. He was short. Somebody jammed him on a big order, and the market, just the bottom of the market fell out. In those days, just like you guys see on a number day, especially in the NASDAQ, when the liquidity dries up, nothing really trades. If you've got 10, 20, 30 on in the minis now, nothing trading, you're stuck for 50, 60 points sometimes. In the NASDAQ during busy days, it was even in the pit, it was even worse. You were stuck for 50, 60, 80, 100 points, depending on how many you had on. And everything's falling apart. So he turned and looked at me like with disdain. That changed my life. It did change my life. That
Sure.
thing changed my trading. I walked out of the pit and I felt grateful I wasn't there, because I could have gotten turned around on a big order. I was a big trader still then. I could have gotten turned around on a big order, and who knows how bad it could have been. Who knows?
And that story stayed with me. And I think honestly, ever since you told me that, I never really had any FOMO about missing a move, because there's two takeaways there. One, I don't know if I would have even played it in the right direction.
Right.
Yesterday's rally was so beautiful. I could have tried to short it and I could have been screwed. Right? One. Two, there's always another freaking trade.
Right.
It's so cliche, but that's the beauty of the market.
Live to fight another day.
Literally offers new opportunities every single day. So that's the takeaway with missing major market moves. They're going to continue to happen. You're going to continue to miss some. You're going to continue to catch some. It is what it is.
One more point.
Yeah.
I will always rather miss a move than to lose money. Intraday,
totally
speaking, swing-wise, trend-wise, either way, I would rather miss a move than to lose money any day, every day.
Well, and here's what I did yesterday. So it was early in the morning, and I saw that we were starting to break to the upside, and I took a couple of the 4130 calls at $5. And when I say a couple, I mean literally two, because that's the thing with event contracts. It's like, when I know I'm not in a place where I can give my attention and focus to the market, it allows me to have some skin in the game and feel like I'm an active participant without being overexposed. So I got my two contracts. They were deep in the money. Each of those $5 turned into $20. And I was like, okay, you know what? I got my sliver of the pie. And that was nice to be able to participate.
That's awesome.
So moving on, what I want to do is I want to go ahead and look at our daily quant stats and our gap and go leaderboard. So let's go ahead and pull that up. So the quant stats, guys, they're available every single day on placeyourtrades.com. And they also go out in the daily newsletter. So on the daily newsletter, the hottest, names and the percentages are the ones that are shown. So you don't have to really do the detective work and go through the site and get it figured out. But the one that stood out to me is ES. It shows if we open below yesterday's close, which was 41.56, there's a 58% probability of closing above the open at end of day. So, like I mentioned last week, this doesn't necessarily mean, we're going to have a massive uptrend again. This just means keep an eye on where we open. If we get a fade, that might be a good opportunity to scale in some cheaper contracts to the upside that would be above the daily close. So I look at these quant stats every single day just as another tool in my toolkit to kind of look at what is, some seasonality, like what does the historical probability tell us and what direction do we have to the upside? We have a gap every single day. The $1 million question is, how do I play the gap? And this gives me some guidance. So ES is one that stood out to me. The other one, okay, so this is a big one, 59%. I think RTY. Okay, so the Russell, if it opens above yesterday's close, 61% probability and a 1.4 profit factor. So that's a great number. I'm going to be looking at the Russell. And then the other one I really liked was copper. So 59% and then 1.82 profit factor. The higher the profit factor, the more of a potential range we might be looking at. So I would say that those are my top three for today. So like I said, these are available on the site every day. They're available through our email blast. It's just a good way to be able to, get a gauge of what the market might be doing. And then from here, let's go ahead and pull up the ES chart. Let's see what we're looking at for today. All right. So, Pax, you gave me your key levels, and I like that you said sort of like a little bit of a range for each of your targets, for each of your levels.
2 points.
And I think that that's great, because I think sometimes we get so keen on like one specific target level that we look at hitting that before we lock profits or before we cut or do things of that nature. Having that little bit of a buffer, I think, is brilliant.
Well, I'm not concerned so much about the particular price as I am about the level. So in the
Mhm.
S&P, I make it 2 points wide, and the Nasdaq, I make it 5 points wide. And in crude, it's like 10 points wide. So crude might a target might be 75 half. I'll make it 75.40 to 75.50. So one key part to mention here is that these I don't look at these levels so much as support and resistance prices as
Okay.
much as I do kind of market magnets. So I'm going to trade
Mm.
the opening range breakout. It looks like the S&P is going to open someplace around 41.46 in the mid 40s. So we come out of the opening range to the upside. I'm going to be long, or I'm going to be trading to be long, and I'm going to take some profit at 41.54, and then the next level at 41.70, then at 41.87. This is one of those targets that I've been talking about since June of 2021. It's been a
Mhm.
huge level for me, and it always will be. It will never change. I will flatten at 41.87. This market, the key levels in the S&P in this range is 40.99 and 41.87. Two closes above 41.87 takes us up to 43.24 to 44.09 is the next big level. Two closes below 40.99 takes us much lower, down to 39.57 through other macro targets.
Sure.
But it's always going to be the momentum based movement out of the opening range, and then the momentum based movement above these major levels. Major levels again being 40.99, 41.87.
So right now, what I have pulled up is the hourly chart, and you can kind of see, based on this trend line I have drawn, we broke out of it and we actually did a really perfect and beautiful back test. So, we'll see where we open. We'll see where the day goes. But right now, I'm definitely leaning a little bit to the upside as well. But we'll just play the numbers as they come. And want to take a look at the daily chart real quick. So there's a quant for today. So yeah, I mean, we're still back in our range packs. They
Yeah.
teased us with the move to the upside. That's where, all the bears got super excited, and now they're, teasing the other direction. So
The trader's market, and
yep,
so look for look for individual trades. Don't look for home runs. The home runs will come in the way that
yep.
we size, size up, size down, or not trade. And as I tweet about and I talk about constantly, trading is less about how many wiggles you catch or how many moves you catch, and more about how you size up, size down, and decide not to trade.
So Pax, walk me through your opening range and how you would trade it. So you go off of, I'm on a 5-minute chart right now, just watching, but you go off of the 30-second opening range. I know everybody has a bit of a different opening range strategy. I've seen 5 minutes, I've seen 30 minutes. Why do you do 30 seconds? Walk me through that.
That's the 30 seconds is how the opening range is defined and has been
Okay.
trading floor. I was on a lot of committees at CME. Pit committee was one of them. Pit committee means that I was like the arbiter during the trading day of different price disputes and things like that. And I had to sign off on different things. So when the market opens at 8:30, the algorithms are turned on. Boom, algorithms are turned on. Volume jumps a great deal. We'll go from 800 contracts in a minute, 900 contracts in a minute to 10 to 20,000 right when the bell turns on. The algorithms are the algos, HFTs, algos just being a euphemism for computer programs that run the market and create the volume. So the algos, computer programs, generate 95% of the volume. Human beings generate very little of it, comparatively speaking. On the trading floor, we were the volume creators. So the bell rings, the first 30-second range is what the algos are using as their breakout, their daily pivot. So I do too.
Okay.
I'm going to be long above that, and I'm going to be short below it. Now, if it's thin and whippy and it's very choppy, I'm not going to trade it. I'm going to take a couple of very easy attempts. So say, for example, the opening range is 41.41. I'll
Mhm.
be long above 41.41. If it goes back inside the opening range, I'm flat. And if it's choppy, I'll wait until the market breaks out above the opening range and starts getting to one of those levels. I'll take a long above 41.54. If I'm long from the opening range, I'll take profit at 41.54. If we get above that, I'll be long.
So you start to scale out at every single one of your market magnets, correct?
Right.
And then if you break above the opening range and you're long, and then it goes back into the opening range, you flatten.
I do.
And then if it goes back up, do you
Right
get in right away or do you wait and see how the price action? Is it a chop?
away.
You get in right away. Okay.
Right. When I tweet about taking it easy as I did today, easy
Mhm.
to me means I buy 41s and the market goes 41 half bid, 42 bid. When the market gives me 1 point of protection or 1 point into that trade, I'm not going to even a 1 point profit. I'm not going to turn a profitable trade into a loss. So
Yeah.
I put in a scratch stop. I buy 41s, 41 half bid. That's easy. 42, it's easy. Difficult is I buy 41s, 40 offer. Buy 41s, 40 offer. That
Right.
I'm going to take a couple of trades. I'm only going to take a couple of stabs at it. And then I'm gonna either cut my size or wait until the market gets above or below the opening range into one of these levels. Over trading is what's going to over trading and markets that don't break out are the markets that are going to hurt me. So
This is true.
I've got to stop trading and I've got to make that decision quickly. It's either easy or it's not. The trade either works or it doesn't. Right or right out. Period.
So what you're saying is you'll give it a couple shots, and if you end up getting chopped out each time, you're not going to keep trying every time we go above the opening range or below it. You're going to take pause, you're going to watch and be like, you know what? I'm not forcing anything until we get some clean direction.
Right. I'm waiting
I
for that.
love it.
Right. I'm waiting for that market to get to one of an action area, right? One of these prices.
And then I think you brought up a good point about not letting a green trade go red, because I have to be honest, that is my absolute kryptonite. Every time I do that, if a green trade, even if my profit starts to go down substantially, I'll want to get it back to where it was. And sometimes that's what gets me to act reckless. And I will tell you, this is called Capital Preservation Friday for a reason. Fridays are the worst day to allow your green trades. I mean, any day is. But on a Friday specifically, your green trades start to go red. You start revenge trading. You start trying to make something happen when nothing's happening. And then it's the weekend. You're hanging out with family. You're hanging out with friends. You're the bitter, miserable one in the corner because you just had a bad day.
Yeah. Yeah. Coaching third base for your son's little league team, and all you're thinking about is, damn, why did I take that
Totally.
schmuck? Stop, don't run, stop, or come on, hit the ball,
Yeah.
Joey. And all I'm thinking about is what a schmuck I am for, right, exactly. And I can't tell you how many times I've done that in my life. So, I protect myself Fridays.
Totally. Well, let's go ahead and look at some of the daily options using event contracts. So I am going to pull up the Trade-Evate dashboard. I'm going to be honest. I went ahead and took a stab at some 4160s this morning. Just grabbed 10 of them. If the market ends up going lower on open, I might flatten the trade, but I'm okay with taking that position. What about you? If we break above the opening range, what strikes are you looking at?
42 even, 4180 and 42 even. I want the cheap ones. Today
Okay.
it's always funny for me to make we kind of talking about this earlier. It's always not funny. It's always difficult for me on a Friday to even want to do anything in the markets. So event contracts are going to be a really, really good thing for me because I can buy my trade as opposed to risking money. I'm going to spend some money as I do when I buy 41s, it goes 40, right? Like I explained earlier, I don't lose money, I spend money. This is a perfect way to spend some money on a day where I just might be feeling a little uncertain in being involved in the market or a little uncertain in direction. So I'll be looking for a late day Friday, don't forget today's, end of the month trade. So end of the month rally, going into the end of the day. So I'll be looking for this range to expand. What the market did on the downside, the markets will do on the upside. Okay, so today is either going to be thin and whippy and choppy, and we're going to do nothing, or we're going to rally. That's my opinion. That's my bias. That's what I'm coming into the day with. Now, if we open up and we get below the opening range, I'll be short. I won't trade it.
Sure.
As far as event contracts, I think it's a much easier way to look at these. And the 4180s are still pretty cheap, and so are the 42 evens for sure.
Yeah, those are super cheap. So you like to go low risk, high reward.
Always.
Okay. Now I have a question for you, because you brought up the last day of the month, and this is something that Anthony Crudele put on my radar. There have been, 2 months that he did a tweet the day of. He's like, you know what? I'm chilling today. I'm going to watch. I'm going to wait until the end, because that is when the major move happens. And I'm telling you, both times that he mentioned, we had a wicked rally in the last 15 minutes of the day. Both times. What's the deal with end of month? Is this like a pit trading secret? Like, talk to me about that. Give me your secrets.
Like, there are different patterns that repeat constantly. So you've got like, I don't know why this popped in my head, but you've got turnaround Tuesday, right? And
Yeah, I've heard that.
Trend days. Fridays are usually trend days, or whatever the market did during the week, it'll follow through. So one of the things that I always say on a Friday is don't fade late day Friday strength, and conversely, don't fade late day Friday weakness either. But
Sure.
don't fade late day Friday strength is something that I think about constantly, and that's just on any Friday. At the end of the month, especially like last month was the end of the month, end of the quarter. So you've got banks, you've got funds, you've hedge funds, banks that need to mark up their books a little bit and rebalance. So when they're rebalancing going into the close, even if it's not 100%, accurate, a lot of traders think it is, and because a lot of traders think it is, it usually produces, a nice follow through in the afternoon. So if there are a lot of shorts that need to be covered, if the market holds its strength today and we do nothing in the morning, and there are a lot of shorts that kind of need to be rebalanced later on in the afternoon, we can see it, or even just a markup in the market. So the monthly statements go out, it just shows themselves to be a little bit more positive than what it normally has been. Mm-hmm. We can see a little bit of a rally going into the end of the day. Now, that's why I think the opening range today is going to be really, really, really important to pay attention to.
I'll be on a watch for that. And if I see that there's a bit of a chop, a bit of a range bound trading, because like I said, we had a huge trend day yesterday. A lot of times it's not as easy the next day. That's just the reality. It's usually not as easy. So keeping in mind end of month as well, I'm definitely going to keep an eye on the end of the trading day. For me, looking at the daily options with event contracts, I am already positioned into the 4160. If we end up getting, and let me pull up the chart real quick. If we end up getting a little bit of a move to the downside, a little bit of a pullback, I'll probably scale into either some 4140s or some 4150s for a cheaper fill, a better price. Because 4160s right now, it's only like 14 points away. It's not too bad.
That's a great point. So, with my bias to the upside, it might behoove me to take some no's under the market for a short, for a break,
Mm-hmm. Yeah. And look, it's very cheap to hedge to the downside as well. But I think sometimes I get gung-ho about buying right away, as you can see, but I want to embrace the pullbacks. I want to get some cheap fill. So if the market takes a pullback but continues to hold, I might jump into some 4150s or 4140s even.
Very good. As they cheapen. Yeah, very good.
Mm-hmm. All right. Any other markets you're looking at today? Or are you focusing on the E-mini?
NASDAQ, I think, has all right. So NASDAQ yesterday, one of our traders, and Place Your Trades traders were long NASDAQ and asked me, where I thought that she should scale out or take profit. NASDAQ has got a lot of 13,228 and 13,282. So 13,230, 13,280 are two huge levels in the NASDAQ in this area. And this is going back a while too. This isn't, just daily resistance. But so I think the Nasdaq is going to have it. The Nasdaq has led. The Nasdaq has been the stronger of the indices.
Mhm.
And yesterday I had a question as to whether or not it was the Nasdaq leading, or if something that Shy Girl had pointed out is that the Nasdaq is always stronger in times of turmoil. So are we setting up for something like that? It's just so many very interesting things. But I think the Nasdaq has a lot of difficult prices to get above for the longs. If we can expand the range, what the market does on the downside, the market will do on the upside.
Mhm.
The Nasdaq stopped at a huge level for me, a December of 20 expiration price and target of 12,808 this week. It's a huge low. That's very, very bullish that the Nasdaq stopped there. Now it just has to get above 13,228 and 13,280. If it can get above there, then we should see 14,100. Those are the next big levels. Now there's other levels in between that we'll stop at and give us trade definition and things like that. But it's very important to look at those. Bitcoin too is something. I love the fact that we've added Bitcoin to. Let me pull it up on my phone.
And the market did just open, so we've already got some opening ranges.
Let me see what the opening range is in the SPOOs, and then I'm going to jump in to go trade it. Hold on.
Let's see what ES is doing.
S&P opening range is 41, 47.75 to hold. Oh yeah. All right, 43.75 to 47.75. 43.75 to 47.75. So the market is right now the traders in my group are long 47.75s or 48s. With the scratch stopping, because the market has given them a point protection, or a point and a half. So if the market comes back down and trades 47.75, they'll take a scratch. If the market gets up to 51.75 or 51.75, they'll pay for their trade and then look to take profit. Listen, adjust targets, okay? 41.56 becomes 41.63. So raise that from where we're opening. Targets have changed. 41.56. Nice job, Cran. 41.56 becomes 41.63 for the target. 41.56 becomes a price point or like a signpost in the road.
Okay. So 41.63 is the next target we're looking at.
Yes.
Okay.
All right, everybody in my group, make sure you're paying. I'm talking to them at the same time. Make sure you pay for your trades. We're long 47.75s. This is the definition of easy, okay? Buy 47.75s. The market stays bid above your entry price. You've got a scratch stop in. You pay for your trade and remove your risk. So traders in my group trade 4 lot units. They sell one at what I call the pay line, which is 4 points above or below the opening range, 51.75. Now you're long 3 and you have absolutely no risk on the trade. You've locked in $200 worth of profit. So now the market stays bid above there, the pay line, bid above the pay line, travels up to that first target at 63, you take profit. Above that next target becomes 41.77. Above 41.77, flatten target of 41.87. Let's kick some ass.
Boom, let's kick some ass. My event contracts are in profit and they're in line with your target. So let's rock and roll.
All right. Thank you,
All
sister.
right. Thank you, Pax. Happy Capital Preservation Friday, everyone.
Capital Preservation Friday, everybody. Have a great weekend. God bless you all.
Bye-bye.